Eurozone manufacturing and services output hits a three-year low, pointing to contracting output and a slowing European economy. Growing concerns over the European debt crisis sparks an emergency teleconference with G7 policymakers and some members of the wider G20 later today. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Rutledge, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So markets still are in corrective mode. Of course, we have the G7 meeting out later today. So Scott, first, do you think we could see anything out of that could potentially be a catalyst for the market? We do have the S&P currently sitting below the 200-day moving average. So could we see maybe a short-term pop-up before it continues its move down?
I'm seeing a lot of headlines saying the market could bounce before we go lower. So a lot of people are thinking that we're oversold enough for that type of bounce. And whenever you get to certain levels in the market, it gets a bit tricky. Because at this particular point, Goldman Sachs came out today and said, they're lowering their S&P targets for the year. Meanwhile, they said it was a generational buy at 1415, so to have them lowered at 1270, not much value added there. But as far as where the market's concerned, we're below the 200-day, and sometimes you bounce around, above, below, and people don't even really know what they want to hear from the G7. But if they hear, I guess, something coordinated effort, if they hear something about a bad, toxic bank that, for 25 years will sit there, maybe they'll think that could relieve some pressure. So you have to be prepared that, that 200-day is resistance, but if it does bounce above it, potentially there's a bit more room to the upside, but I do think it'll be a rally to be sold.
Now, sellers did step in yesterday, but of course the market did come off of its lows. So I think the question is, was that covering, or were people looking for bargains?
I think you have a little bit of both. There are a lot of guys that sold the market at 1370, at 1320. They sold it correctly, so they're like, okay, if I sold it at 1370, 1320, why not try it at 1270? Or if you were short, why not cover? You don't need to be the last one to cover or even the first one to buy. But if you look at the chart of the S&P, you will see a lot of the measured moves have been met. This was that head and shoulders top. We rolled over, had a little bounce, continued. So we're below the 200 days. So for a trader, this is what I'm looking at today. I'm looking at yesterday's low, which is right here at 1266. You have much bigger support down here around 1245 to 1250. And then if the market hears something that ignites a rally, here's the 200-day. The 200-day is around 1284. And I do think there's a chance that the market could rally back up and retest this broken pivot. But I think this would be an area to short, not to buy.
So is there any place to hide right now or make money?
Well, yesterday you saw some relative strength in high beta names. They've been weak. Yesterday you could have shorted Apple through 560 and then bought it at 555. Today with the market down, see if that can go positive. Also, Amazon was up a few dollars early, closed on the highs. You look here at Amazon, still holding higher, very potent day yesterday. Maybe with it down with the futures, you could buy some of that. So there are a lot of, you actually have to be like a short-term cash flow trader, take your trade, or have a longer-term thesis, and you have to figure out what that thesis is for you.
Right, and as you said, we did see high beta tech act well yesterday, but the banks still no bounce. Could it be because of JP Morgan, what we have out today?
It seems like people knew that JP Morgan was coming out with news, and if you look at the chart here, JP Morgan, it closed on the dead lows. Okay, yesterday we were trying to play a bounce. I'm like, the banks are heavy, something's probably cooking there. Meanwhile, closing the lows, opening lower. I think that you have a point of reference here in JP Morgan, which is around 30.42, and then major support at 28. I do think you watch it today. If they could bring JP Morgan green and you see a divergence, maybe they'll say, finally, the stock's been discounted enough, that sector's been discounted enough, and that could help fuel some type of oversold bounce. But if we don't see that, I would wait till $28.
And gold ignited on Friday, held in well yesterday after Friday's move. So can it get going higher now?
I think some traders went back long gold like I did on Friday, and there are different commitment levels. If you look here at Friday's action, you will see that you had a nice gap up right here. This 148 and a quarter held, so support is intact. It gapped up, and then yesterday you saw an inside day. So I would say, for me, I'm going to stay long the GLD as long as this gap holds right here. If it can go sideways for another day or so, I think you could add if it gets above this 158.30. But then you have this intermediate downtrend around 161 and then even a bigger one up here. So one day like we saw on Friday doesn't make a trend. Right now, traders are trying to figure out the commitment to it.
All right, well, we're going to be jumping into all of this in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.